following the Barclays Hedge Fund Symposium, the annual Capital Solutions Insight event. What did you hear? What was the main message that came from that event from hedge fund managers?
Sure, yes. So we just hosted our 9th annual Hedge Fund Symposium, which is the marquee event for the prime brokerage group at Barclays. We had over 600 people in attendance. And some of the key themes obviously focused on current market opportunities, but we also touched upon some of the more structural issues the industry is facing, and specifically relating to the hedge fund industry, performance and on average disappointing returns of late.
Was the outlook a little more optimistic, given that we're seeing a return of volatility and dispersion,
right.
or managers just a little
certainly
nervous?
Yeah. So we're in our view, there certainly is some optimism out there. The report took a look at the recent performance trends, and while the equity industry has on average outperformed, certainly versus the MSCI World since 2000. There has been, particularly in the post-crisis period, in isolation, disappointing returns. And in our study, we took a more nuanced look at that to provide some context as to what are some of the driving factors.
Kate, good morning. One of the factors that we're hearing about is the idea that we're seeing quant funds in particular, and this is part of the volatility we've seen over the last few days, rotating out of growth, rotating out of momentum, and starting to rotate back into value. Are people talking about this? Is this some short-term phenomenon, or do you think actually we could be at a turning point here?
Well, that's a great question, and certainly that we see sustained interest in quant strategies has been one of the bright spots within the equity segment overall, and with the return of volatility, increased dispersion, and correlation factors evolving, we remain optimistic in that sense.
What are you hearing about regulation? I'd be interested to know, kind of from your viewpoint. Over the last few years, increasingly, when I talk to managers, they talk to me about the fact that small funds continue to struggle, that the regulatory burdens are simply too great. Can you have small hedge funds in this kind of environment? Right,
that's the challenge, right? And I certainly wouldn't want to comment on the regulatory environment right now. There would be better people to make that judgment. But however, we do see continued interest in emerging funds. However, increased consolidation is certainly the major theme. The larger funds continue to get bigger.
Yeah, talk to us about merger arb and quant-focused funds, because they've been front and centre this year. Are we seeing, flows in or out, and is that where we should be finding alpha these days?
Yes, certainly. We've seen, merger arb strategies has been one of the benefiters from a flow perspective this year, and this has been a record year for deal flow. Obviously, there have been some major stories there, but we do see strong performance, and amongst the groups that we work with at Barclays, strong returns there.
And yet we've seen some high-profile players throw in the towel again this year, like Tourbillon. We see that every year, but
yes.
Why? Why this year? Why?
Yeah, I think the analysis that the Barclays study showed was that it's been a very challenging period for generalist long-short managers, and part of those drivers. That we spoke about, market factors are starting to change, but it is a natural evolution of the industry, and investors have been voting with their feet and allocating at an increasing pace to non-equity strategies, and it's just a natural part of the evolution in a maturing business.
Kate, given the fact that the world is at the moment, the world feels like it's really driven top down. The macro story is the dominant one, be it trade wars, be it what is happening with central banks. How are the macro funds performing?
Yep, strong continued performance there. I mean, it's one of those stories where you get the most frustration on the investor side, and recent reports that the Barclays team have produced indicate sustained interest in here, but always looking for the better performers. But we're certainly, given the market backdrop, we expect to see an increase in flows and investor interest here.
Can I ask you as well about what people you talk to in the industry tell you about some of the synthetic products that are floating around at the moment are increasingly driving flows. More and more money, it seems it's piling into synthetic hedge fund ETFs, etc. And I'm wondering, the managers that you talk to, how significant a threat they see that as being.
Yeah, the managers, the universe that we work with, I think that they're focused on alpha generation, and while that might create some noise, they're excited about the return to market volatility and higher dispersion, and really making the case for active management. And we see sustained interest in those types of offerings amongst our investor universe.
The report is fascinating. You go into so many different things, and one of them is crowded positions.
Yes.
Talk to us about where the crowded positions are and how that might change over the next 12 months.
Certainly. So in the Barclays study, we observed some of the characteristics that correlate with higher returns. So decisions that PMs can make that will have an impact on their performance. And crowdedness, so stocks that are popular amongst hedge funds, was one of the topics that we looked at. And we saw a negative correlation to performance with funds that have exposure or more exposure in this segment.
And I just want to point out that we have a great story today by Ari Shapiro about the momentum names, the hedge fund hotels, in fact, that are actually performing very, very poorly the last couple of days. Guy?
One of the things, I'm sitting here in Europe. Europe feels like it's on a different planet compared with the US markets. What does the study find? What are the people you're talking to telling you about the gap in performance that exists across the Atlantic? Are we going to see a sort of geographical switch anytime soon?
Yeah, so again, pointing to our recent study and the analysis that the Barclays team put together, we looked at geographical performance, and while we saw increased or better performance on an absolute return basis from US focused managers, we did see better alpha returns from Europe, which was an interesting analysis.